Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MAIDSAFE. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 23rd of March, 2018. Today I'm joined by my co-host Mike. Let's begin. Welcome, Mike. Thanks for joining the show today.
Glad to be here again.
So, let's just get started with the weekly global market cap, total market capitalization for 7 days. We can see it's been a fairly sideways week, but we are up for the week, and that's good. We started out about 332 billion. We're now up to, 337 or so billion. So it's been, I think overall it's been an interesting week. It's definitely hasn't been a great week, but we've had some good days, and it's really turned the market around. I think people were getting really concerned there with the droppage we've had the last 2 or 3 weeks, and I think now we've seen some stability come back in and some hope and promise.
Well, what we've seen from a chart looking perspective is from back in February, it got down to 279 billion for the market cap, and this week we had another round down to 279 billion or thereabouts, give or take a few millions. But what that would go and say is that if we would, as a chart watcher, if you get, a bottom and then you retest a bottom, then you have a tendency, if the volumes and the cap starts going back up, that usually shows a change in sentiment. So if we can go and get the market cap back up into the 400 plus billion range, then that might signal to some investors who are chart watchers that it might be time that they are back in for the next ride up, whatever height that might take us to. But I'm glad that we're not going down anymore. It's nice.
Yep.
And a nice thing to see money's coming in rather than going out. But at this point, we'll just have to see how things go over the next week. But we may have turned a corner. Hopefully the beginning of April will be, a enjoyable time.
Yeah. All right. So we didn't have really any significant gainers this week of note, so we're going to skip over that and go just straight to Blocktivity here. As usual, what we've been seeing, Ethereum is still pegged with 8,432 unconfirmed transactions. I believe it was something similar last week. So
yeah, a little over 8,000.
They are maintaining around that level, it seems. Still no solution in sight, so I think we're still going to continue to struggle with high gas prices on Ethereum, and we just hope that they come up with a solution. If they don't, I reckon in another year's time, EOS is going to be up where Ethereum is. So,
well, with Ethereum, I think is as far as for that, I think once we get some more, coins that are starting and being done on the EOS or some other platform.
Yeah,
once the
right.
other platform starts becoming a common thing, then I think that's going to go and maybe provide a little bit of relief on the EOS network, or not on the EOS, but on the Ethereum network, and that could be something that is a help down the road. But I do agree that they do need to get some upgrades.
It's going to depend also on how many new ICOs and things start to trend upward, or if it just continues, or if it trends sideways. I mean, it's gone up hugely in the last year, exponentially. So if that exponential growth continues, then even with EOS coming into the fray, I think Ethereum is still going to remain pretty pegged. But we'll see what happens. It's interesting times, as always. So on with topic 2, our news segment. Our first news item of the day, Twitter's CEO says Bitcoin will become world's single currency within a decade. Twitter CEO is Jack Dorsey, the CEO of both Twitter and the payment service Square. And we've talked about Square a couple of times recently on the show. Square is a service for retailers that allows them to take Visa and MasterCard, and Square is now adopting Bitcoin into their service paradigm. I'm not sure, I don't remember if they're adopting other cryptos as well. Maybe they've got Ethereum on the burner too. But yes, so he says, has said that he sees Bitcoin as the world's and internet's single future currency. He believes that Bitcoin's leading emergence will take probably over 10 years, but it could go faster. So, I mean, that's great publicity for Bitcoin and really the entire crypto marketplace, in my opinion. But that's great publicity, and we like to see that sort of thing being talked about, whether you agree or disagree with Bitcoin versus Bitcoin Cash, or in that whole debate, which is the real Bitcoin. But whether you agree or disagree specifically with the details of what he's saying, it's good to hear a leading voice like that come out and say something like this. That's great news for the community as a whole.
I like the fact that any place that, or any situation that gets more availability, places to use your cryptos, I like that. So
yeah,
some
that's what Square is doing, and
definitely,
yeah, it's I think it's awesome. Our next news item, PayPal's Peter Thiel says longing Bitcoin is a hedge against the world falling apart. It seems very apocalyptic coming from Mr. Thiel. PayPal co-founder Peter Thiel described Bitcoin as, quote, a hedge against the whole world falling apart in new bullish comments on March 15th. Speaking at the Economic Club of New York, quoted by CNBC, the Facebook and rumored $20 million Bitcoin investor said that while he did not foresee Bitcoin fulfilling the role of a currency as yet, its ability to replace gold as a store of value was different. Quote, I'm not talking about a new payment system, he said. So, yeah, he's putting his neck out there too. That's a bit surprising coming from him, being that PayPal is really a competitor in some ways to Bitcoin. But yeah, I think that's another really positive bit of news for Bitcoin and for the entire crypto markets this week. So that's two bits, you know, get the two big leading voices now saying very positive things about Bitcoin this week.
more good news.
So our next, we're going to go with a bit of a follow-up. We've been talking about Nano, and we've mentioned the BitGrail hack in previous episodes. So this bit of news came out this week. BitGrail plans to refund hacked users with self-issued token, but not allowed to sue. So Italy-based cryptocurrency exchange BitGrail announced that it promises to refund Nano XRV tokens stolen in a February hack, amounting to $195 million worth, so long as users sign an agreement to forego any legal action. In a press release on its website, BitGrail said that, quote, the use of the platform for the victims of the theft will be bound by the signature of a settlement agreement. The latter will be characterized by an expressed renouncement from the users to every type of legal action and will have to be formalized through the compilation of a form. BitGrail will not take responsibility for the security breach, stating that instead the fault lies in Nano software. Yeah, link to that will be in the show notes. Yeah, I'd be very careful, you know, here. I mean, look at your options. There could be a class action lawsuit that might still come about. I don't know what the end result of this is going to be, but this is definitely very interesting news for anyone who held Nano tokens on the BitGrail exchange. But our next bit of news, this one goes to Zero Hedge. 26 million Americans own and 8% plan to buy cryptos, new survey shows. A recent study on Americans and cryptocurrencies commissioned by Finder.com in February shows that 8%, or around 26 million, of Americans have purchased cryptocurrency. Finder's survey was answered by 2,001 American adults using Pure Profile, a site that gives cash rewards to users that participate in surveys. The survey found that out of 92.05% of Americans that have not purchased crypto, almost 8% reported they are planning on doing so in the future. I'm not going to go into all the details of this survey, but I just want to focus on that first little bit there. So 8% currently do own, and the survey reported 8% are planning to do so in the future. So that's another 8%. So that's a doubling in the amount of Americans that own crypto. I think that's hugely bullish, really. That's a hugely bullish statement and very fascinating. That's really showing a doubling basically is an indication of exponential growth. And we've been in a big pause the last month, 2 months in the crypto sphere, I think, with a downward trend. I think it's been a bit of a pricking of the bubble that we got with the massive amount of influx that happened in in December and January a bit. So, but this indicates to me. I mean, this was in February. This survey. So that was when things were going more sideways or down. So I think this is a really positive survey here, showing that people aren't really too fazed by it. There are still a lot of people looking to get into the area. I certainly get a lot of interest in some of my comments on other threads on Facebook and stuff when I'm talking to people. I get a lot of people showing a lot of interest myself. Of course, that's just a one-off. I couldn't say, and I didn't say in the past anything about that because, it's just a one-off. You can't tell. But a survey like this kind of really shows that there is a lot of strong interest still happening here, and that when things level out, as they are starting to now, we could see another big push into the global market cap for crypto. So I think this is a really bullish and positive thing.
I just think of it as, when you start talking about world-changing technologies, and I believe crypto is a world-changing technology, just this, very, very similar to when personal computers were created, when the internet was created, when cell phones became commonplace. This is basically the same thing. And there's two different graphs that will probably look pretty similar. One, and that basically it's a slow rise up, and then there's a vertical, and then it plateaus up at the top. And as far as for information, have you heard about this? I think we're in the vertical on that at this particular point. Not everybody has heard of cryptos, but I think as far as for the average person, they've heard of cryptos primarily due to last year's massive run-up of epic proportions. So a lot of people have heard about cryptos. They have wildly differing, opinions of it. But the knowledge of what this is dramatically rising, and that's in the exponential growth. The adoption, though, is what makes early adopters, if they're investors, that's what makes early investors piles of profits. And we aren't to the vertical point on the adoption at this point. Even with the doubling that is mentioned in the article, we're still not in the vertical. The vertical is when I'd say we're at 20% going up to 60 or 70% market penetration. And when that happens, what we saw last year is going to look like something quaint by comparison. And that's something that I'm eagerly looking forward to. And it's just a matter of time, the way I see it, because you go and you look at everything that crypto in general can go and do, and it's mind-boggling. I mean, it's a complete sea change in technology, and as money, if a company decides that they don't want to take part in it, it's to their detriment, the way I see it. So, with the people who are planning to buy, a lot of people say, oh, well, I'll get some when I get my income tax refund. Being in America, a lot of people get income tax refunds here. And that's what, a lot of people are talking about, wanting to put some in, at least get a little bit of it, and a little bit can turn into something significant if the people are capable of just letting it sit. And we've been MAIDSAFE, hodlers for, from just after the ICO. And quite a few years we've held on to it, since it was worth nothing by comparison to where it's at now. And
Yeah.
where it's at now is drastically lower than where it was back in January during the end of the year run up. But the way I see the end of the year run up, I don't see the pullback as anything other than we were testing to see what was, the crypto markets in general were testing to see how high could they go on what momentum they had from last year. And, that's double plus where we're at now. But is it like, are we going to get there? Yeah, I know we're going to get there. We're going to surpass that this year. It's just just a matter of time. And, the charts go and say that, yeah, it could go down some more. But is that going to be the case? Most people who are hodlers, if they still haven't sold, are you going to sell? Heck no. So, as far as for the prices, I think, yeah, they could go down, but I don't think they will. And, with using MaidSafe's price at 32 cents a piece, for those who bought it at 10, are you ever going to see 10-cent MaidSafe prices again? I doubt it. I don't think you'll ever see that. It would take an implosion the likes of which is unfathomable at the moment. I just don't see it happening. Just like anybody's going to go and say, okay, well, I'll go and get a good share of Google for $45, like it was when it first came out. No, you're not. Well, it might go down. No, it won't. It would take a collapse for it to happen. So when it comes to people,
it's just a buying opportunity, the lower it goes. So
that's the way I see it.
Huge resistance, and it gets to these levels.
Yeah.
Let's get on to the
next
article here. We've got major European fintech investor and Block One announced $100 million fund for EOS projects. Now, we've mentioned before in a show, EOS had partnered with another firm with a $300 million fund for EOS projects, and this looks like a furtherance along that route. There's another $100 million fund now, so I guess that would bring their total to $400 million if I'm not mistaken. So this is more good news for EOS longer term. It's more investment in their blockchain project, Block One being the company behind EOS, just to be clear on that. So, yeah, I just wanted to bring that article up. EOS has so much money, such a war chest, and they're just going to attract a huge amount of development to them. That's what I'm seeing, and that's. I think you can't own enough EOS long term. It's going to be a winner, one way or another, by hook or by developer crook. That doesn't really make sense. Okay, next article. So let's see. Volumes on most major cryptocurrency exchanges are fake or inflated. Study. Earlier this month, cryptocurrency trader Sylvan Ribes investigated into the volumes of most small-scale cryptocurrencies and discovered that the trading volumes of OKex, the fourth largest cryptocurrency trading platform in the world, is mostly inflated. Ribes, who initially set out to conduct a study on the liquidity of cryptocurrencies and digital assets, utilized a method he named slippage to test the order book of each cryptocurrency trading pair. The slippage method tests the liquidity of digital assets by selling $50,000 worth of each asset across various exchanges. After selling $50,000 worth of cryptocurrency, Ribes measured the rate of decline of that particular cryptocurrency on a certain exchange to measure its liquidity. Ribes implemented this method to test the liquidity of cryptocurrencies on OKex, Bitfinex, Kraken, and GDAX. Operated by OKCoin, formerly the largest cryptocurrency exchange in China prior to the local government's crackdown on trading, Hong Kong-based OKex briefly became the biggest cryptocurrency exchange internationally, as reported by Cointelegraph, overtaking Binance in March 2018. At the time of the reporting, OKex remains among the four largest trading platforms alongside Binance, Huobi, and Bitfinex. Bitfinex, Kraken, and GDAX are regulated cryptocurrency exchanges that allow cryptocurrency to fiat trading. GDAX was founded and is currently being operated by Coinbase, which has more than 20 million users and is the most widely utilized Bitcoin wallet. Kraken is based in San Francisco, while Bitfinex is based in Hong Kong alongside OKex and Huobi. According to the charts, Kraken and GDAX, which are mostly utilized by users to process cryptocurrency to fiat trades, deposits, and withdrawals, recorded the smallest slippages, signaling that the two exchanges have significant liquidity to deal with relatively large sell-offs in the range of $50,000 to $100,000. I recommend people have a look at this and have a look at this chart and understand that the slippage percentage on the side is important to note. It's a logarithmic view. So when you're looking at these crosshairs here that they have for the different exchanges, and you see that OKex is at the top along this curve, if you can imagine a curve there, and then you realize that the slippage is an exponential, is a logarithmic function there for the side. You can see what's going on is that something very fishy is going on, rather, and I don't claim to fully understand what's happening here, but to me this is very suspicious, and I welcome people to comment or give their take on what's happening here. I'd be curious to know what people think, but it looks to me like volume is being faked on OKex. I don't want to just come out and say that that's what's happening, but that's my personal take on it at the moment, which could easily change if somebody could add some clarity there. So what goes on to say in the article: large slippage means manipulation possible. On GDAX, a sell-off of 50,000 worth of a particular cryptocurrency only led to a slippage of around 0.1%. However, a $50,000 sell-off on OKex led to massive slippages as the value of cryptocurrencies fell and order books became unstable. So on a blog post that's linked on the article detailing his findings, Ribe stated that the research has shown that the volumes of OKex and other cryptocurrency-only exchanges are fabricated and inflated, given that a small amount of sell orders can manipulate the order books and prices of cryptocurrencies. He says, quote, "The chart is striking. It shows how, although all first three exchanges seem to behave rather similarly, OKex pairs in red all have a massively higher slippage with regards to their volume. Like I explained before, this can only mean that most of the volume OKex claims is completely fabricated." So I'm not going to go more into this article, but please do your own research. And if you use OKex, I strongly recommend you have a look at what's going on here and judge for yourself whether it's a good place to be doing your trades. What's your thoughts on this, Mike?
Well, me and Tyler had a conversation about this prior to our show, and one of the things that I brought up when we were having our discussion was, when you're talking about selling 50,000 worth of cryptocurrency, as the transaction happens, that's going to go and create volume. Now, whether they go and count it for each side of the trade, I'm not sure how the volumes work on the exchanges. But one of the things that does kick in is what's called the market depth. Now, a lot of people who are familiar with looking at the charts that are on a lot of the exchanges, when I was involved with Poloniex and using that, they had the market depth as a green and a red side of the price charts and stuff, and you could see how much of an order book was there based on how deep is the market depth. And what I'm curious to know in this particular study was, what is the Ribe's, what is the way that he does the comparison between market depth and volume, because they're two separate things. And that's one of the things that I would have have to have a question answered is, what's the difference? Because you can get quite a significant volume on fairly thin market depth if the price is moving like a seismograph in the middle of an earthquake. If it's zigzagging up, if it's bouncing up and down and up and down and up and down and up and down, because there is a massive number of trades going on, that can go and have a very significant volume on a fairly thin market depth. And
you're talking about high frequency trading sort of thing, or
very much so. High frequency trading is one way that you will see drastically, just amazingly high levels of volume when the price more or less doesn't do a whole lot of changing. But if the price is going, like, for example, there's a term that they use called channel trading. And channel trading is when you go and sell at a particular price, wait for it to go down, and then you buy it back at a particular price, wait for it to go back up, and you're basically going and getting it like if you had a marble or a skateboarder going back and forth in a pipe. If he goes up one side and then goes down to the bottom and goes up the other side, that's essentially going and doing a channel. The values stay between 2 points. And if there is a very quick movement between the lower part of the channel to the upper part of the channel, and you see this when the chart goes what we call sideways, when it stays more or less the same rough value, but it goes back up and down and up and down, and it stays between two. You can draw lines across where the resistance is on the top and where the support is on the bottom. And as the price goes back and forth, the faster it goes back and forth between those, that's a utopia signal for high frequency traders, because they know exactly where, or they have a really good idea, especially if it does it fairly regularly. You can go back and forth between a couple of prices and you make bank. And when you have a very volatile stock or a very volatile coin that's going back and forth and trading dozens of times a second, and you see this if you're looking at the exchange on the chart, so you see all these transactions, just watching the transactions. If you have them so that they're loading every half second, and you're seeing 3 and 4 transactions every half second, it's like it looks like just a big chart getting pushed way down. You can tell that there's massive activity on that particular crypto pair. Whether it's like exchanging Ethereums to Bitcoins, Bitcoins to Cardanos, Cardanos to Ethereums to Tethers, whatever you're picking for your currency pair. If there's a lot of transactions, a lot of activity, you might not have a whole lot of changes in the price, but you can have massive volume, especially if there's a lot of people who are not sure which direction the transactions are going to go, and they're trying to get into the position for where they think it's going to go next. And you can have a fairly high volume and not have a very big change in price. You can have a very high volume on a very little amount of market depth. And market depth is, how much Bitcoin is on one side and how much of Ethereum or whatever the currency pair you're evaluating, how much is on each side of that transaction. And if you have someone who is moving from one side to the other, and they're moving a significant chunk of money, $50,000 is going to go and move just about any market you get, especially once you get out of the big three. If you get out of Bitcoin, out of Ethereum, or the top 5, once you're out of those currency pairs, the market depth is going to be much lower on those, and that same $50,000 transaction amount is going to go and move the prices much more significantly, especially if the market depth on that particular market is much less than it might be on a more more well-known or more well-used market. Because I can say from personal experience, when I was moving currencies around, even something as small as a 2 or 3 Bitcoin move can have drastic effects on the price of the outlying crypto that's not very well known. And I moved the price of one about 7% on one trade that I did, because I made sure that I adjusted my price so that it took one instant, and the whole entire order was executed within like a second and a half. And the price left this great big huge black spot on the market depth after I did that particular trade. Lost my shirt on it, but as far as for that particular trade, I can see how the slippage, if that's what he's terming as slippage, is how big is that big black spot on the market depth chart. If that's what he's referring to as slippage, yeah, that's very easy to do with a $50,000 trade. That's much bigger than what I did, and I was able to go and cause that. So
we'll have to look into his blog post in more detail and
for
give
sure.
Some deeper analysis next week. This is really fascinating. I think, while we can't clearly state what's happening here at this point in time, what we can see is that there is a very big difference between the exchanges. So either there's just something different going on them, and that to me stands up as a bit of a flag. And I just recommend people need to look into this very closely. Another interesting aspect to this is that oracles like CoinMarketCap that so many people go to and track their portfolio with and make their trading decisions based on, uh, oracles like that use a weighted system, I think generally weighted by volume, to determine what the price movement is. And with OKex being such a large exchange, or reportedly large exchange, because of their reported volumes, CoinMarketCap is giving a lot of weight to them for the coins that they list. And this could be giving a lot of false signals to the market. So, I don't know what's going on here. I don't know that anybody knows for sure, but I really think we need to, as a community, people need to look into this and think about it.
Yeah, I'm after watching what happened with Mt. Gox and all the shenanigans that went on there. That's something that is cause for concern for me, is when I see an exchange starting to interact with shenanigans and stuff and doing things that are shady. If that's something that is being done, then that needs to stop, and or needs to be addressed and remedied in an acceptable manner. And that's where using BitGrail, since we had discussion on them a little bit earlier in the in this particular show, when BitGrail has an issue with missing coins, the fact that they are attempting to resolve that, now granted, I know they're feeling exposure, hence the offer to, okay, if you don't sue us, here's our replacement if you happen to have the coins that were in your wallet got stolen. Now as far as for that, I'm aware that not admitting guilt is part of a lot of lawsuits and stuff, and I'm not concerned about not admitting guilt, because I don't feel overly slighted by the situation. But then I didn't lose a ton when my nanos were I don't know if they were affected or not. I've never been able to find out if mine were affected. I did have nanos on BitGrail, and I'm not sure what the situation is. I haven't seen any emails about the offers and stuff. It's very likely that I wasn't affected. That being the case, seeing that BitGrail is wanting to try and fix things, that's at least a step in the right direction as I see it. And I'd like to see it get resolved and, get this put behind them, have them, reassure their customers that they are doing everything they can to increase the security so that this doesn't ever happen again, and, see some customer service that takes care of the issue. And that's one of the things.
I think you're too kind, Mike.
I may be.
I would be like, string them up.
I may be.
They haven't been sending out emails to you, and I would think, given what's happened, they would be on that, with the email flurry about what's going on to assure people. So I mean, that to me is a bit of a red flag. But
and
anyway.
a lot of it has to go over, both of us are aware of our personal, the personal experiences with cryptos, and the way I figure it is it significant? And for me, it's like, it's a learning experience. If I get hosed, it wasn't dramatically significant.
Of money, but yeah.
It wasn't as big as the other previous situations that we've had to write off, So
for our viewers, anyone who's thinking about using BitGrail, please do a lot of research before doing so. Know what you're getting into there.
Yeah.
Okay, well, we don't have an ICO this week, so we're going to go straight into the MaidSafe development update, and we have some really big and interesting news happening on MaidSafe this week. Just going to go through the general highlights and see what we've got going. So first, they had the first of what will hopefully turn into a regular catch-up with the Safe Meetup organizers today. Lots of valuable feedback and ideas were shared on the call about how to best build and engage communities of supporters, which we will share very soon. Number two, the front-end team has reordered their priorities for the next month in order to prepare for the Developer Conference in April. They would like to get the developer website ready for the conference, and they are therefore pausing the UI UX, that's a user interface, user experience work, for the Peruse browser in order to focus on getting the developer website ready. Number three, the Safe Client library team developed a new FFI function. It's a link there in the highlights. That's a test to simulate network disconnect. So that's what the function is called. And that function exposes a previously hidden function that simulates network disconnects This will help front-end app developers to test their apps in conditions where the network connection is unstable. So that's a really important tool. Number 4, the routing team is continuing with work figuring out an approach to deduce a consensus order of observed network events from a directed acyclic graph, DAG, which was composed from the gossiped messages. They have some test code in a private repository that they have been working on, and we'll progress this to an open solution. We just published a blog post regarding this. You can read about it here, and there's a link there in the highlights. And lastly, the Crust team finalized and merged their chat example, which they were working on last week. So the big news here is the 4th point, the routing team continuing to working out an approach for the routing there. So I'm going to skip down to that. We may go into the article as well, the blog post. So just going to read the paragraph here. We are continuing with the work of figuring out an approach to deduce a consensus order of observed network events from a directed acyclic graph, which was composed from the gossip messages. We do have a solution that is not available as open source right now, and we cannot use that exact algorithm. We have some test code in a private repository that we have working, and we'll progress this to an open solution. We have just published a blog post regarding this, as mentioned before. So go on. So on to the good parts. This ordering consensus algorithm for intra-section membership changes is nice and modular, as well as mathematically proven. And that's an established solution for this issue. This means less code, less test nets, and in parentheses, many test nets were to find all the rules regarding order, which have grown in complexity, although it works. So their existing code works, but it's become complex and a bit of a burden, I think, for them to maintain, as it's basically just code used by MAIDSAFE. Next, say we cannot say this is definitely the last unknown, as we have not detailed network restarts after complete collapse or network managed upgrades. So they're talking about they're testing out this DAG code in place of existing MAIDSAFE code to see if it can work. And so far it seems to work pretty well, but they haven't tested it in all conditions yet. But this new code base is a large step, and one that allows us to much more clearly see the remainder of the features for a fully featured network. Or in other words, beta. The golden beta. Dum bum bum.
Woo!
Much of the work, and there is an awful lot, is currently hidden here, but will be exposed very soon. We ask for a little patience with us in the routing team for the next few days and possibly weeks. If this pans out, then it will be very much worth it, and you may find us able, at last, to give reasonable estimates of remaining development work. This does not mean detailed roadmap with timelines, but we will have a very clear route and make it clear which tests we wish to do, most of which will be in client APIs, language bindings, and platforms. So basically, what they're doing here is my guesswork at it. What they're doing here is they're testing out some patented code, and to see if this new approach, this different approach to what they've been doing, will fulfill their goals in achieving the dream here of a good routing system. And what they're finding is that it looks like it will work. So what they next have to do then, what their next big step is to write their own version of this code. So they want an open source version of it that will do what this code does, that will replace their existing more complex code base in this area. I'm not an expert on any of this, but basically I think this is really good, because whatever they develop here in an open source manner will be able to be used by other groups, and other groups have shown interest in this area, but because it's patented code, it's when I say other groups, I'm talking about other big cryptocurrency companies, like IOTA as one example, really interested in this kind of technology. So if they can develop an open source one, then it will be picked up by other groups, and that will help with maintenance of that code and development of that code further down the track, which is really good, because their custom solution that they've had so far is a bit unwieldy, I think, and so using this DAG, directed acyclic graph technology, could really speed up development and get them where they need to go faster. And that's all I got to say about that. I mean, I think it's a really good development, a really big development, and I hope it works out as they seem to think that it will.
That'd be awesome.
It would be awesome. So as always,
beta.
Well, alpha 3 first, but you know, could help us get along quite a bit quicker. So as usual, all the show notes, all the links are in the show notes, and please, if you have any interest, check out what's going on here and dig into the details if you're a developer and get involved, because MAIDSAFE is a huge paradigm shift. A huge paradigm shift. It is. It's a big game changer, folks. So that's all we have today, and I'd like to thank both our viewers and my co-hosts for joining me today. We hope you found the episode informative and helpful. Please subscribe, like, comment, share, and as other crypto YouTubers say, smash the bell button if you want to get updates on our activity. So tune in next week for another interesting episode.
Smash that like button.
Bye.
Catch you later.